So all of those figures I've just highlighted are red. So slowing prices, slowing transactions, and general slowing in the growth. Month on month drops, and we've seen a quarter drop. This is exactly how these things play out, massively slowing down. So these are the early signs, everybody. These are the early signs. Big change. You're not seeing what we've seen the last 2 years of everything in the green, the market moving forward so quickly, and rents and transactions and everything's great and everything's moving. This isn't happening anymore. The signs are there. This is a changing market. I've been here 13, 14 years. I don't think I've ever seen this much going on. Is it going to do it? I don't know. Hello, ladies and gentlemen. How are you today? Greg here for The Big Short, episode number 6. So for those who are just joining us, and for those that have watched our videos before, firstly, thank you, of course. Quick recap. What is The Big Short? The market is doing fantastic. We all know that. And in fact, I'm now shooting this at the beginning of February. So the January figures have just come out. Extraordinary sums of money are being achieved, record sales, record values, records. This is brilliant to see. I want to make that very, very clear. It's fantastic. It's great for the government. They make so much money through tax, and they're putting it back into the city, which we can all see. It's brilliant. But what The Big Short is all about is just looking at the other side of the market, stuff that people don't tend to talk about for various different reasons. That's what this is about. This is not a bias show or anything which people may think or suggest in the comments. This is purely looking at other data that is coming through that people may be interested to learn and understand. So far so good, I would say. I think our last show got about 1.3, 1.4 million hits, so that's brilliant. And thank you so much to everyone that's been watching it. I think we've totaled in the region of 4 or 5 million hits so far in just 5 shows. So let's keep the momentum. So please like, follow us, comment below anything that you want to talk about. I'll greatly appreciate it. So without further ado, let's get into it, shall we? So The Big Short, episode 6. One thing to make very clear, sorry, just on that, sources. Now, this is a very big thing that we have at The Big Short. This is not my own personal thoughts. This is not my interpretation. A key thing that The Big Short is all about is taking data from third-party sources that are in the market and talking about it. That's what this is. And this is what makes this show so unique. So when I go through each point on this, I will highlight the source, and I'm sure different things will come up in slides and what have you during the show, and the source will be there. Go and check it out. Go and read it for yourself. Let me know what you think in the comments below. But that's what makes this show so unique. So each point we go through, I'll highlight the sources first. So number 1, let's start and get straight into it, shall we? So on the sales front, sources coming from Dubai Chronicle, Sterling Capital, Real Estate, Construction Week, Property Monitor, and Offer Brief. The Dubai property boom is over. Prices are cooling and supply is flooding in. So Property Monitor, the COO there, Zan, so I say this every show, still yet to meet him. I hope I do one day, but for those that aren't familiar with Property Monitor, go and use it. It's a phenomenal third-party source of data that extracts a lot of its data from the Dubai Land Department, so a credible source again. But these guys are brilliant extracting data and putting it into a very easy form for anyone to go and read and understand more about what the market is doing. So definitely have a chat with them. Anyway, so the COO, he describes the current conditions as a shift from acceleration to absorption. Prices are cooling, volumes remain strong, and supply is expanding rapidly. Clear signs of a market moving from acceleration to absorption. Well, it is. We'll talk about it the whole way through this video, but 400,000 units plus are now under construction. 14,000 units are being launched every single month. There's a big pipeline coming, and what does that mean for the market? So a LinkedIn post, so there's quite a few of these that are now surfacing, which is very interesting because I'm seeing more and more from brokers. You know, it's in their best interests to say that the market is doing incredibly well, but I'm seeing a lot more, and I'm sure you are as well, of brokers now commenting differently within the marketplace. You have to be more specific about the areas you buy, and gone are the days of buying anything that you want. Some agents actually being very suggestive about what different areas aren't performing, which is what we're going to talk about now. So there was a LinkedIn post which has come up, and that was saying the source was actually from the Dubai Land Department, but that was suggesting that Dubai Marina is down 10.7% and Dubai South is down 14.3%, which is massive, which are huge figures when we consider that Dubai Marina is a very, very well-known area, and it's definitely one of these areas which is pillar within the real estate market. So that's already seeing some sort of effects happening at the moment. So, and then Dubai South, I think there's a lot of market chitter chatter that that's now the place to buy. However, this person here is claiming that perhaps it's not. Right, the ZZ Riviera, here's another one. This one was going around as well. Someone purchased this one at 984,000 dirham. And then True Estimate, which is Bayou, very big property platform here in Dubai. They're now suggesting that the value on this is 663,000 dirham. So that is a drop of 32.6%. So that's a very, very, very big drop. Now, I know a few people are going to say, but not all markets are the same or areas are the same. No, they're not. Places like the Palm Jumeirah has been an absolute pillar, the pillar of Dubai. When the market drops, it's the least to fall. It's the quickest to recover. It's the fastest to rise. It holds its values the best, and we've all seen that. So I quite understand certain areas or certain types of property perform different from others. But let's not kid ourselves that majority of the market is 1, 2, 3, 4 million dirhams, not 10, 20, 30, 40 million dirhams. Values maybe, but transactional volume not. But we'll talk about that in a minute. So what you tend to see is when markets do change is that the cheaper areas tend to be hit first, and I think that is now what you are beginning to see, because it's more affordable for everybody and the areas aren't necessarily prime areas. There's a lot of churn, there's a lot of access to stock, etc. So when the market does start changing, these are the areas which tend to be hit first. Is that what we're seeing now? Signs are suggesting that we are.
So if you'd like to explore our slides in more detail, we've added a link below where you can download the full source reports. All of the data is publicly available. We've simply brought it together in one place for you.
Let's move on. So the market is bleeding. The Dubai real estate turns red. So the sources are Property Monitor, December 2025 report, and the AirDXB Q4 2025 report, which is our own. We get all of our data from actually Property Monitor and also the Dubai Land Department. So what's it saying? According to Property Monitor, December 2025, the dynamic price index fell 0.17%. In December, after a 0.42% drop in November, you've had now 2 consecutive months of prices dropping. Haven't seen this in a few years, have we? So again, these are signs which are suggesting that something could be happening. So average price per square foot, according to Property Monitor, is 1,673 dirhams. So the Property Monitor December report also reports a 0.46% drop quarter on quarter, confirming softening momentum. So you're seeing the drops happening now. Something is happening, something is going on. I want to make it very, very clear. I'm not suggesting there's a crash. I'm not suggesting anything. And for those that have been in the market know this, for those that don't, crashes don't happen. You don't wake up tomorrow morning and suddenly everything's dropped by 20%. These things don't happen. Even in 2008 with the financial meltdown, the huge recession that happened, I was actually in the real estate market, been in it since 2000. I was in the market in the UK at this point. It was horrible. It was horrendous. It was a big credit crunch. There's lots of different words for it. It took about 8-9 months to catch up with Dubai. So you don't wake up the next morning and find that things have dropped. So again, I want to accentuate that because I've seen a couple of comments of people suggesting that, crashes happen immediately. They don't. And especially in a market like Dubai, where there is no reason for prices to start dropping other than the fact it's almost self-fulfilling. The fact it's releasing so much stock into the market, this is why you're finding this reaction now happening. This will be gradual. This will not be sudden unless there is a global situation, the AI bubble burst or whatever it could be. Even then it will take months and months and months for things to change. But what you're going to see is the market has gone out now 2 or 3 years. If it continues the way that it does, you might find it takes another 1 to 2 years to drop down. But what I want to highlight here, at the moment, these percentages are small, I hear you saying. What happens then if you see a rise in these percentage drops? Yes, it's only 0.17% or 0.42%, but what happens if that jumps to 1%? That 1% over the course of a year is 12%, 1% each month. What happens if that jumps to 1.5%? That then is an 18% drop within a year. Is it going to do it? I don't know. I want to make that really clear. But at the moment, the data is showing the prices are dropping. We've seen month-on-month drops and we've seen a quarter drop. More information. So from our report, Q3 to Q4 transaction volumes declined 3.4%, confirming a softer quarter end activity. So like all these things, again, don't wake up tomorrow and prices just drop. That's not what happens. Transactions will slow down. What happens when transactions slow? It means there are less transactions, which means there's more supply in the market, which means people then have to reduce their price because there's less buyers in the market to then find the deal. This is now what you're beginning to see. The transaction volumes are dropping, which now, at the end of last year, you are now seeing the prices are now beginning to drop. So this is exactly how these things play out, and you're beginning to see the green shoots of this. We also go on to say in our report, if we look at a 2-year Q4 comparison, so transaction volume growth, if you look at Q4 23 to 24 versus Q4 24 versus 25, the market's actually dropped around 74% in the sense of transactional volume growth. So it's massively slowing down. And then if we look at transaction value growth, Q4 23-24 versus Q4 24-25, that's dropped by 25%. So massively slowing down. That's what you're finding. That's what so far, according to Property Monitor, they're saying the same sort of thing. Everything is now slowing down. Signs, so all of those figures I've just highlighted are red. So slowing prices, slowing transactions, and general slowing in the growth of transaction and values. So moving on, big one. This one is huge. I wanted to pause our last Big Short video because this was incredibly important information that came into the market. Again, all public, all out there. Everyone can go and check it out. But there's a company called REIDIN, everyone wishes to pronounce it. They've been around, I think, longer than I have in Dubai, 15 years, give or take. So they are very, very similar to Property Monitor. They are a data hub for transactions that are going on in Dubai. Now, they did a very, very, very big deep dive into the value, the total value of property transacting. REIDIN Debt and Rebirth report examined the mortgage market and refinancing in ready, i.e. resale, secondary, whatever you want to call it, sales. While headlines tout record numbers for sales, the numbers beneath the surface tell a different story. So this is what the report came out to say. The headlines in October 2025, claimed that the total ready resale, secondary sales transactions were 220.7 billion dirham, big figure. But this figure includes 20.3 billion in gift transactions. So this is parents handing it down to their children or something like that. So properties that are transferred with no money exchanging hands. Now, the reason it's listed is because you do pay a small transfer fee. So it comes through the data as an additional transaction. However, it's not. It's effectively a gift to someone. It also double counts mortgages. So one property can be counted as both a resale unit and additionally as a mortgage unit. So as we all know, when you have a mortgage, it means you're borrowing money from the bank. The bank's details are obviously then processed as a co-owner of the property. So it's listed as two transactions. So after removing the gifts and the double counting of the resale secondary property, the total was actually 126.45 billion. That's 42.7% less than the figure initially given. Now, Dubai has its own systems. There's nothing wrong with that. However they wish to operate, it's absolutely fine, and that's what happens. But when you start scraping that data and understanding actually what it means, 42.7% aren't actual transactions. They're gifts being handed to someone or transactions being double counted. So very, very interesting situation that has evolved there. Again, check it out, third party. This isn't mine. This is REIDIN, it's online. Go and have a look. Lovely pie chart looking at it now. You've probably seen it on the screen. Have a look at it and they give a breakdown of what's what. Call them, chat to them, ask them what this is all about. I'm sure they'd love to speak to you, but a very, very good source of information. And these guys are intelligent people, much like the guys at Property Monitor. They know their stuff, they know what they're doing. Speak to them, have a chat with them. Right, so moving on. 4 sources, 1 message. Real estate is in trouble, apparently. So the sources are REIDIN again, Betterhomes, very, very big real estate firm, we know them, their Q3 report, and also Knight Frank, a global real estate consultancy firm. Their Q3 report came out after we did the last video. So just a few remarks that have come out from this, which I think everyone needs to hear and see. So Knight Frank Q3 2025 2025 Dubai Residential Market Review. 6 villa estates recorded price declines over the last 3 months. Al Barari down 4.8%, Al Fajan down 0.2%, Arabian Ranches down 2.7%, Dubai Hills down 6.4%, Dubai South down 2.9%, still going, Expo City down 3.8%, Knight Frank, one of the largest global consultancy firms, in their research report. Go and have a look, right? It's there, it's their information. That was then backed by Betterhomes, who put in their Q3 report that after 5 consecutive quarters of gains, they claim, Betterhomes, that villa and townhouse sales declined 34% in Q3 2025. This reinforces early signs of pricing pressure and larger ticket segments. Now, what I find interesting, I say this, I know for every show, everyone will say how villas are the best and there's not enough of them and the demand is so high. Well, you've got one of the largest real estate brokerage firms in Dubai and one of the largest consultancy firms, real estate, in the world, who are both giving figures that the certain villa markets are now in decline. This is the start. This is what happens. So credible information there. So Property Monitor, again, the December report, they came out and said that off plans reaching 73.3%. Now that's a continuous comment that we're making, is roughly out of all transactions in Dubai, rounding up, 75% are off plan. 3 in 4 transactions happening now are properties don't even exist. It's air, it's sand, it's an empty plot or concrete coming up. 75% of this market is driven by that. What type of buyer buys? Majority is going to be speculator and investor. They're going to buy it to flip it, buy it to take the keys and then sell it, or buy it to put a tenant in. So there's a lot of speculation going on in this market. And as we know, this market is flying. As I said, January's just had a phenomenal month. But when you look at the figures, it's all driven by off-plan sales. It's very easy to see that headline and packages it all into one, but you need to rip this apart, because off-plan is speculative. It is an investment situation. It is what it is. We have to look at it, but I've got way more interest in knowing what actual property that exists that I can go and live in and touch is actually doing, and it isn't looking good at the moment. So let's not lose sight and let's not fall for the situation that the entire market is doing well, including all segments, because it's quite obvious, isn't it? One segment, which is off plan, is what's driving and holding this market up. So what happens when investors realize that, well, there's 450,000, probably 500,000, 500,000 units probably are going to be under construction by the end of this year? Who's going to move into these? I'm going to talk about the population in a minute, but go and have a look at my previous videos for those that haven't. We talk about the population increases, and I'm sure that's happening. I'm sure it's happening. But the people coming over aren't buying because transactional volume is dropping, and they aren't renting because transactional volume is dropping. So who is it? It could be labourers, because as we know, talked about this in my previous video, according to Property Monitor, constructions are now being finished roughly a third earlier. So from about 1,300 days, it's dropping to about 9 to 1,000 days now to complete. Where more and more people in the market, just before I came and did this action, Azizi Building in Meydan is handing over early. A lot of developments are now handing over early. Is this because they brought more labourers in to complete the projects early so that they can get their money out of the project sooner? Well, all the data is saying that. So we have to remember that not everyone that's coming into Dubai is a multimillionaire driving a Rolls Royce and is buying everything. Yes, of course they exist. We all know that. Most of those people, though, aren't in Dubai 12 months a year. That's something else we need to look at as well. But there's a lot of people that are coming in, so it could be construction, it could be hospitality, all these industries, which is huge in Dubai, but I don't think are given necessarily the accountability that they should be. So, and all of this information I'm giving is saying this. So back onto this. So Property Monitor, off-plan reaching 73.3% resale transactions, which totaled 5,233 in December, but that's actually down month on month by 1.8%. Now, I know we had a great January. You've got to look at months that have gone by. So there's actually suggesting that there's a small drop there happening, or quite a large one, 1.8% in when we talk about this is actually quite large, with resale accounting for 28.2% of total market transactions, which is not a lot. It really isn't. Espace, big firm, been here a long time as well, specialise in villa communities, good company, great company again. In their report, which was H2 2025, go and have a look at it for yourself. They reported resale value H2 2025 versus H1 2025 is down 17%, double figure. Resale volume H2 2025 versus H2 2024, so year on year, they reported that resale volume was down 1%. And then resale volume, H2 2025 versus H1 2025, they reported a drop of 13%. Big numbers. So, and the secondary market volume, 32,301 transactions, down 1% year on year, and down 13% compared to H1 2025. So what you're now seeing is an acceleration when you start bringing in the time frame. So comparing year on year, it's only 1%, but comparing 6 months on 6 months, that's now jumped up to 13%. So you're finding that these jumps are double-digit jumps. These are now significant and something that really needs to be looked at. But again, go and have a look at their reports. Betterhomes, Knight Frank, Espace, it's all online. Have a chat with them. Okay, so moving on. Now, according to Espace, back onto Espace, the H2 Real Estate Report 2025. Again, go and have a look at it. So here we go. They do a analysis of apartment sales. So they look at the apartment market, H2 year-on-year transaction volume and average price. So what they're saying is that, sorry, beg your pardon, is that on transactional volume, downtown is down 17%, Dubai Marina is down 29%, Palm Jumeirah is down 20%, JBR is down 9%. So transactional volume on what is 4 key areas are double-digit declines. Well, apart from JBR, which is 9%. So downtown, Dubai Marina, Palm Jumeirah, and JBR are down anywhere between 9 and 29% in transactional volume. So as I've said before, this is how it starts. Transactional volume slows down, which means there's more stock, which means owners then have to reduce prices to attract buyers. That is now what is happening. Let's look at the villa and townhouse sales. This is again secondary markets. This is all secondary, it's not off plan. And this is what we need to be looking at, is this market. I'll explain why in a minute. The key villa community is also seen in the red. We're looking at transactional volume again. All of the Arabian ranches, all of it combined with ranches too, they've dropped 26% in transactions. Emaar South down 66%, Palm Jumeirah down 40%, and then Emirates Hills down 35%. There are some that are in the green, of course there are. So it's not that this is affecting every single area, make that clear, but you're beginning to see different parts now being affected. Is it because prices went up too quickly and a lot of people are now backing out and saying, I'm not willing to pay that price? Could well be. But it's so important to be tracking this information that when you start seeing the start happen with transactional volumes drop, this will only trigger. So as I've said just before, values then drop. And then let's fast forward this now to this off plan. If you are already seeing transaction and prices, actual prices drop according to Property Monitor, where's the market going to be when these 400,000 or 500,000 units that are under construction going to be? If it's happening now, where is the market in the next 3, 4, 5 years as all this stock comes into the market? So these are the early signs, everybody. These are the early signs. Espace Real Estate, go check out the report and see what they have to say. So another one, Gulf News Property Monitor. Amazing news to see a 550 million dirham penthouse go at the Bugatti residence by Bingatti. Mouthful there. So that's sold for 550 million. The money is in Dubai. The money is always in Dubai. This is why we like Dubai. There's always money moving around. I did have a record for a short period of time back when I was being a broker, and I sold the most expensive house ever sold in Emirates Hills, which was about 93 million dirhams. And that's when the market in Dubai was not doing very well. And this was 2000, I want to say 15, 16, and the market was just dropping off. It was a free fall. Money is always in Dubai, and especially at the dizzy heights, the super prime, the ultra high net worth individuals, they're always in Dubai. So these transactions are always going to happen. Great to see, but you can't let that alter your mind in the way that what other parts of the market are doing. Don't think because one penthouse goes through at 550 million that everything else is fine, as we've just explained by all these different third-party sources isn't necessarily the case. What we go on to say here is that in contrast, Property Monitor's 2025 data shows that the bulk of market activity is concentrated in the mid to low segment. 20.9% of transactions were studios, 37.2% were one beds, and 48.7% of all transactions were priced 1.5 million dirhams and below. So basically half of every transaction going through in Dubai at the moment is 1.5 million dirhams and below. That is colossal, that is huge. And this is why we're already seeing and hearing various reports saying that there could be a saturation, or there already is, of one beds and studios coming to the market because that's what's being bought, because we know that developers can capitalize on it. Developers can build these, sell them quickly and make their money very quickly. So the key takeaway here is while landmark luxury deals capture headlines, market depth and liquidity in 2025 are driven by lower to mid-market transactions, dominated by smaller, more affordable unit. All right, moving on. So long-term rentals. So that's sales now done. Let's just move into long-term rentals, sorry. Long-term rentals in the res. This is where I think the market is really feeling a pinch at the moment. So Property Monitor again, a great company called Team, talk about them in every video, but these guys effectively can insure your rental contract against any defaults. So go and talk to them if you're a landlord, definitely worth doing, but it's a sea of red on my page at the moment. So according to Property Monitor, year-on-year and quarter-on-quarter declines across total contracts and renewals, with new leasing offering only limited relief. So Q3 25 versus Q4 25, total transactions down 4.9%. Renewals actually is a standout, that dropped 8.3%. Q4 2024 versus Q4 2025. Okay, so we've just done a quarter on quarter in 2025. Now we're doing year on year quarters. Transactions down 5.7%. New contracts are down 4.3% and renewals are down 6.61%. So you're now seeing transactional volume drop in general. So according to Dekeem, their rental report in 2025, most tenants are choosing to renew rather than move. 61% of all contracts, and the sharp drop in Q4 renewals, which was a drop of 13.09%, shows affordability pressure. So according to Rakesh, who's the CEO and co-founder of Dekeem, Q4 2025 wasn't a blip. January just confirmed it. In the month that's usually the strongest for Dubai rentals, peak season, corporate moves, New Year leases, the numbers came in cold, ice cold, he says. So what we're saying there is January is notoriously a very, very busy month because a lot of people, new year, new start, on all this and come to Dubai. He's saying that year on year, so January 2025 versus January 2025, total contracts down 17.8%, new contracts down 9.45%, renewals down 22.17%. So across the board here, you're seeing that the rental markets are just dropping. So where are these people living? I know a few people are going to say, they're buying, Greg. Well, transactional volumes for secondary are dropping. Okay, they're bought off plan. Okay, they're bought off plan, but it's under construction. So what's going on here? So if secondary transactions are dropping and rental transactions are dropping, what's that telling us? It's telling us that although it feels Dubai is incredibly busy, and it is, we know that tourism is huge here, but we have to remember as well, 3 in 4 people, beg your pardon, in Dubai are actually tourists. Government data that was released, I talk about it in previous videos. So we can feel that the city is incredibly busy and naturally think it's residents. It's not. 75% of people that you see in Dubai are tourists. The other thing to look at here is that what I've said before, although we feel that there's a population increase and the data is showing it, which will be correct, I'm not saying it isn't, it's who are these people? If it is labourers, which I think it is, if it is hospitality, which I think it is, because we know that, because buildings are finishing sooner, there's more units under construction than Dubai history at the moment, there's more hotels, there's more F&B, food and beverage, restaurants and stuff coming online. People have to work in these establishments and on these building sites. So this is what we feel accounts for a lot of this population increase, because transactional volume, rental volume are dropping. And when I say that, I'm talking about the new Dubai. So everything, let's say, since 2000 has been built. Dubai Marina, Jumeirah Lake Towers, Arabian Ranches, Jumeirah Golf Estate, Sports City, Motor City, Maidan, Downtown, Business Bay, you know the areas. So that's what we're focusing on with this. So there's data, 2 third parties, go and talk to them, great sources of information, and see what they have to say for themselves. So go check it out online. So what is the market saying? So the sources are REIDIN, Time Out, AGBI, Khaleesi Times, Construction Week. The general ethos, I think you're going to see some snapshots coming up here at the moment, is that you are feeling a bit of downward pressure on the market. So December 2025, Dubai Villa rents fell 0.74% month on month. That came from the UAE Residential Property Price Report in December 2025. So December 2025, villa rents, which is gold dust, can't get hold of them, there's not enough of them, apparently have dropped 0.74% month on month. Things are changing. Right, moving back to Espace and their report. So Espace Real Estate H2 report shows declines in many key areas for rental contracts, new and renewals. So I'm going to read this out, but there's a lot of info. I'm sure this is going to come up on your screen again, but look at this. Look at the names that are in here. So Palm Jumeirah, new contracts down 17%, double digits, but renewals are up 17%. Arabian Ranches down 14%, renewals down 6%. Springs down 13%, new contracts, renewals down 11%. Meadows, new contracts down 21%, renewals down 11%. Double digits across the board, all red apart from Palm Jumeirah renewals. That's the villas, that's villas. Moving on to apartments now. Blue Waters, new contracts down 3%, renewals down 16%. Dubai Marina, new contracts down 12%, but renewals were up 1%. JBR, new contracts down 4%, renewals down 6%. JLT, new contracts down 3%, renewals down 1%. What is interesting is new contracts across the board. Villas in the Palm, Jumeirah, Arabian Ranches, Springs and Meadows, and apartments in Blue Waters, Dubai Marina, JBR, JLT. New contracts are all red. What's this telling you? I mean, these are areas that people are very keen to live in. Now, could it be the rents have just gone too high and a lot of people have now moved further out? They've moved to areas like JVC, etc., to save on rent? Could well be, but you're definitely seeing a big change. You're not seeing what we've seen the last 2 years of everything in the green and the market moving forward so quickly and rents and transactions and everything's great and everything's moving. This isn't happening anymore. The signs are there. This is a changing market. Right, moving on. Launches and handovers. So, sources, Property Monitor, REIDIN and Knight Frank. So, Dubai supply tsunami. Talking about now off plan. New projects are being launched every 13 and a half hours. That's a lot of stock coming to the market. So according to Property Monitor, in the December report, 167,000 units were launched in 2025. That accounts for one new project every 13 and a half hours. According to REIDIN, their December 2025, 6,835 units were launched at an average of 1,861 dirham a square foot. So 2027 poses a greater risk with 70,537 units forecasted. Is that going to be true, or do we think that that number is probably going to go up? Now, that's actually going to be handovers. So there's big chats at the moment that the handovers that there should be coming in for 2026 is probably around 110,000, give or take. However, looking at the data that's gone by, give or take about 50-60% of what is planned to hand over hands over. So I think you're going to find in 2026 alone about 50-60,000 units coming to the market. So roughly 15,000 units every quarter, 5,000 units every month are coming into this market. As we know, not every developer can finish projects early. The things do fall into the following year, like we saw 25 into 26. So if 25 is falling into 26, then 26 will fall into 27. So you're seeing this pickup, this snowball effect of more stock rolling into future years. So there's a lot more stock coming online. And as I've said, there's around 350 to 400,000 units claimed to be under construction at the moment. However, that was at the beginning of this year. So if you look at launches and if they maintain, and if you see the level of transactions, which we've already seen in January, which was great, huge amount of transactions for off plan, that is only building that number 350, 400 to 400, 450. And this is just going to keep going up and up and up. So that's a lot of stock coming into the market. And what happens, the more stock, means more option for buyer. Buyer then can negotiate harder, which means prices drop. You're already seeing transactions drop. You're already now beginning to see prices drop. 350, 400, 450,000 units handover. Where's this market going to be? According to Knight Frank, between 2026 and 2030, approximately 350,000 homes are currently scheduled for delivery. So that's what Knight Frank is saying. That's for delivery, not under construction. But bear in mind, you've always got this relentless amount of property being bought every single month that are going to eventually come into this market. So the early warning signals, key indicators that the market was shifting in 2025. So sources are Property Monitor, Allsop and Allsop, one of the largest brokerage firms in Dubai, Cavendish Maxwell, very large surveying firm, Betterhomes again, DXB Interact and ValueStrat. You're going to hear all these names, you're going to know all these names. So what are they saying? So according to Property Monitor, sales volume dropped 26% between October 24 and March 25. Marking one of the earliest signs of slowing momentum, right? And this is what I was discussing back in episode 1. According to Betterhomes Q1 2025 report, sales volume fell 10% quarter on quarter in Q1 2025. I talked about that in episode 2. So population versus rental demand disparity. So H1 2025 data showed 1,000 residents per day, but long-term rentals fell by 43%. There's a 70% of transactions are off plan, which we now know is now jumped up to 75%. So sources came from ValueStrat, Cavendish Maxwell, Property Monitor. So launches and handovers, Allsops have said in their H1 report that 5 units are entering the market for every 1 unit launched. So that's showing a significant amount of volume coming through. So it's very, very interesting that you've got all these different sources more or less saying the same. What I'm trying to do, as I've said in these shows, is just compound all of this and say, look, there's a different side to this market that is happening. Yes, the market is doing incredibly well when you look at it a certain way. If you look at it the way that I just described, perhaps there's a different situation that is evolving. What's the market going to do? This is now when it is a personal opinion. I think you're still going to find a lot of transactions happening through secondary. Is it going to slow by the end of this year? I think it is. I think a fair few investors are probably going to realise there's a lot of stock going now. You're seeing a lot more investors and developers. Phenomenal amount of marketing that's going into their projects. You're seeing it now everywhere. I've been here 13, 14 years. I don't think I've ever seen this much going on. There's never been this amount of launches, never been this amount of property under construction ever in Dubai history. So we all know that this is a very different market we're in, and the data is now showing that perhaps secondary transactions and rental transactions are slowing. So is that the physical people aren't here to buy and rent to live in them? It's going to be an interesting market. So look, take whatever you feel from this. This is purely just saying there are other things going on, third-party information in the market for everyone to read. Make up your own mind. Not saying don't buy. I would never say anything like that. I own property still in Dubai. I've owned property in Dubai. I remember the good old days, and it was only 2 years ago that I was in JVC openly trying to find the cheapest unit, renovating it, knowing that I can make X percentage on it. I'm not doing that anymore, that's for sure. I've still got property in Dubai, so for all of those that say I'm being biased, I am not. I've been here, I have my businesses in Dubai, I own property in Dubai. I am trying to sell that property though, and I will say that. The market is changing, so take what you can from this. Thank you to everyone who has tuned in for this episode, and of course everyone that's tuned into the ones before. And for those ones that haven't seen the ones before, go and watch them, because this is a gathering situation with lots of different data that's painting a certain picture. 1.3, 1.4 million views on the last video. Come on, let's beat that. Please help me out. It'd be great to just see that this actually move forward and see, you know, more people seeing this different side of what's happening in the market. But look, don't take my word for it. Talk to your broker, talk to whoever advises you, talk to all these different people, but just make sure you're asking for the full picture, not just the headlines or just a segment of the market. Ask across the board. Best thing to do. So anyway, look, I think that's it from me. Lots of information there. Look, I look forward to doing the next video. Like, share, comment below, reach out to us. Any questions, we're here to help. We do advise buyers to buy and sell. I must say majority of the people that I'm advising now are looking to sell. That isn't necessarily because they're watching this video, isn't necessarily because they're talking to me. They can see what's going on. They've put their property on for long-term rental for 3 months, nothing's happened. They were told they could resell the unit for 1.3 million and they're getting offers through at 950. All these stories are coming through now. So, you know, talk to the people that you trust, you know, but make sure you're asking all the right questions. Right, that's it from me. Thank you very much for your time. Look forward to seeing you next show. Thank you. Bye-bye.